Friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis Show, where we look at what happened in the market during the day, try to learn something from that, and then plan for a better trade for the next day. And this is analysis that's for December 6th, Tuesday, tomorrow, 2021. So what exactly happened today was that it was a buy on dip, and markets closed flat. It is a hammer that's seen on both indices, and we have policy event that's coming tomorrow and day after tomorrow. No, I think day after tomorrow. So a little bit cautious is what we could probably the reason for this close. Let's get to the charts and see. And this is analysis, as I said before, for tomorrow. Look at this Nifty candles, and you have a hammer here, very clear hammer. A small wick is there extra, but look, almost like hammer. Hammer on the top could indicate a reversal. Not necessarily always. It's confirmably if it goes below the low of the hammer. Banknifty also has a hammer. It's a green hammer. It closed much above the previous day's candle. Again, here also the hammer is on the top, almost on the top. Not exactly a full-fledged hammer. You have some extra wick on the top, but if hammer, there is a possibility of a reversal. So the higher the time frame the hammer appears, and exactly the top or the perfect shape candles, the more probability that it may work better, right? But regardless, the wick size of the hammer indicates that there is enough of support, enough of bulls out there to buy in. It's a buy on dip that happened. Market dipped and then it got bought over. That's the price action today. If you look at the short-term time frames, you can see that it's a failed attempt to move further up in the morning. And then it made a V-shaped recovery after a dip, and then it was trending up. That's Banknifty. After the first recovery, it managed to go. But in the case of Nifty, it did attempt to go up, failed, got a dip, then tried to move up, got selling pressure, moved on again tried to move up. So multiple V shape, V, inverted V, and another V, and all in the range of 150 points. That's the price action that is happening today at a low weeks of less than 14. And finally, Nifty managed, which was very volatile, managed to close green, while Nifty just closed flat. Both of them make me hammer. All the bands, if you see, this is what is showing. So there is expansion, no doubt about that. Price is almost very close to the top of the band. The top of the band is moving up, but there is small beginning of a consolidation. You can see expansion, right? Probably it's indication that it may take some consolidation here before moving forward. It has happened earlier also. Look at here. The 14 November time frame, it has taken a pause and then broke out again. Number 20 seconds took a pause and then broke out. So every time it takes a stop, the band begins to show that it's consolidating, but then moves up. So such kind of a pause has happened in the Nifty, but Nifty, no signs of even an expansion. It's heading straight up. So all the bands are clearly indicating it's a price up move that can be expected. So here we have the levels. 889 will resistance to the upside, and then 18900 rounding number. It's a Fibonacci 70 extension, 78% level also. 18500 levels is support downside, and 440 is the level on the previous swing low on the Nifty. Banknifty is 43,500 and 44,000 rounding numbers. That's resistance to the upside, and 43,163 support downside, and then 42,623. That's the support after that. So those are the levels. All times we have seen that it is indicating, and momentum is clearly bullish, and it's kind of flat momentum today, if you like, only true, but otherwise it's in the bullish zones. Is today also it's rising and it's already in the bullish zones. Trend is clearly bullish and moving up, with rising strength on the Banknifty and falling strength, but still both are in the DMI positive zones and bullish zones, right? The VIX has spiked up a little bit. That's still less than 14. It's 30.73. Open interest of the futures is showing its long build up on both indices. Put call ratio is not bullish enough, 0.67, and that's what is shown in the Nifty. But Banknifty is above 1, so it's bullish. Banknifty is more bullish as for the next expiry that is on December 8th than the Nifty, right? It was other way yesterday, right? When Nifty was more bullish. So options levels are the 18,700 to 19,000 is where the highest put and call writing is done for the next weekly expiry, and 43,000 is where the highest put writing is seen, and 43,500 is where the call writing is seen. So very close, very tight range, so that indicates more bullishness. So we just saw and options were yielding bullishness for the expiry, while now PCR is not that great for the Nifty alone, but Banknifty is good. That's how it was. Sectors, you see, reality did well, metals did well, nearly 2% of up move in the metal, and nearly 0.7% of up move in the reality. Other sectors are all red or they're close more or less flat. At the momentum possibility, if you see, it can be expected is that all the sectors maintain the bullish momentum, except the two sectors that you have to stay away right now. Short-term momentum there sideways for this pharma and auto. Others are all in the bullish zones in the short term. If you look at the heavy weights, Reliance has fallen today 1.5%. Right? Infosys is also close flat, but others are all green, but less than small green, less than 5%, 0.5% of green. So from momentum perspective, heavyweights are all in the bullish zones except two of them. One of them is Kodak, another one is ICICI Bank. Can you believe that? It has fallen to sideways in short term. So some pullback on the ICICI after good up move that had happened in multiple weeks, where it was staying bullish. Now institutional data is again another sell-off, second day of sell-off by the Fyers. Not much, 1,139 crores of selling in the cash, and domestic institutions have double bought. So retail money is buying it whenever there is a dip. So today's dip was bought by the domestic institutions of 2,607 crores of buying in the cash market. So institutional support is still there. FIs have bought heavily last week, 10,000 crores of buying happened last week. This week there's no only selling, but that should be okay as long as the FIs are double buying it, right? So crude oil has been falling down, but now some bounce up is happening. This spiked up to 83 levels. It is a 2% rise today that we have seen, so it's in a trend line channel, so it's probably hitting up. So as long as it's below the 100 or 90 levels, it should be fine. Dollar is also cooling off, and it's in the bearish momentum in the short term, and it's 104.3 levels, still not too far from the multi-decade highs that we had seen in previous months. The rupee is not strengthened that much, although there is the dollar index has helped a bit. It is still at 81.82, and it is a rising USD and our currency pair chart that we have seen, but the momentum is sideways, not bullish yet. Dollar index is bearish momentum, we have already seen that. Gold is actually at resistance, and it has attempted to climb above resistance, and then 2 weeks of 11% of up moves happened, so it's in the bullish momentum. So on the short term we're talking about. This is flat trend. Recent is also flat trend. Seen as if nobody allowed to see the Dow Jones and S&P 500 and the Nasdaq indices pre-market tomorrow. If big moves are coming, then you have to be cautious. But Nasdaq and S&P 500 are clearly at resistance on the channel top and the previous resistance. Right? That's just one where it is. But we're talking about medium term. So the Dow Jones has taken out a lot of resistances, and it has broken out from the channel top and then seems to be consolidating, right? So basically all of them are at resistance, trying to hang on and climb into that bullish zones on the short term. That's what is happening. So be cautious if a reversal that is coming in and that is coming in fiercely, then we may have bad days in our market as well. So you have to be cautious and careful on that pre-market. The whole night the trading will happen on this US indices. So we will come to know that tomorrow how it performed. That's what we have to look at. So the major events are there. RBI policy meeting, monthly policy meeting. That outcomes are coming tomorrow, day after tomorrow actually. So the uncertainty and the volatility and the sentiment, movements, price volatility would be there. PMI data is India is coming, US is coming. It's all tomorrow, today, likewise. December 8th we have the US jobs data that is also coming. That could be after the expiry, probably the Friday is where we may react. So volatility can be expected out of this data. Two stock picks for the next day. One is GMR. It has come in earlier previous week as well. So GMR Infrastructure is it's a infrastructure stock, and it looks like it is showing some kind of breakout, and it is having a rectangle pattern, and there is a breakout that has happened. It given one pullback also, and further it is moving up. So this may be the right time to enter that, and the stop loss is very clear. That's below the neckline. That's a 40 levels. Another one is DLF. Its reality sector itself is doing good, and DLF, if you look at the weekly charts, you can see it's a rounding pattern, cup and handle, multi-year. So the more longer the cup and handle, the more effective, powerful it will be whenever it's breaking out. And it seems to be breaking out. Green candle close has seen a beautiful pullback of handle part is done. Now it may bring out, it may be position as well as short-term swing, both it could work, but you start to trail and build up your positions, pyramid it, or average it. All these things you have to do it at this resistance and support levels that you're seeing on the charts, right? So short swing trades as well as positional swing trades is possible on the DLF on the long side. That's it. Let's try to summarize what happened today and what we can look for tomorrow. So my view, tomorrow is still mild bullish. SP also does the same. It has been the same. That's what the chart is saying. But resistance, of course, will be there because we're very, very close to the 19,300 points hardly, and we almost touched the 18,850, 900 zones also. So it's very, very close. So today basically it was a buying dip that happened. Who bought? We already know. It's institutions that bought, and it was a comeback. So there is the people sitting there to buy the dips. So that's institutional money. It's retail money that is in there, and it's not ready to crack down. It has done small retracement, and it says it's done with. Whoever has booked the profit is done with, and then it wants to move further up. More people are coming in to buy. Remember, we had a breakout from the crucial resistance on several weeks back, and you made all-time highs on both indices, and Banknifty has done it multiple times during the last week. And we are in the bullish momentum, right? No doubt about that. The price action is above the average supports. Wicks school of less than 14 momentum and trend indicators are bullish. Institutions were buying, is buying. Crude oil has dropped, US dollar index has dropped. All these are positive things, and then charts also sell the same. There is no indication of any major bullishness, bearishness that has come in yet. So 19,000 resistance can be expected, and there is a possibility that tomorrow it can trace a little more and then go to the 18,400, or it can go and then bounce up again. So that's about, we cannot predict all those things, but there are possibilities. But all the chart still looks small bullish. These markets you have to be cautious about, as I always say, because it's at a resistance zone. But otherwise, the dollar cool off and the weeks cool off and the crude oil cool off, all this is going to help the bulls. 18,400 and 19,000 and 42,500 and 44,000 are the levels to watch on the up and the low on both the indices, Nifty and the Banknifty, right? So that's my view while bullish for the next day. So yeah, if you're trading options, this may be not bad time because premiums are low, but still the VIX is smaller, it is less, so you can go for swing trades, and overnight positions can be hedged with less risk, but premiums are less. It's something good, so it is both good and bad, mix, but better than having huge volatility, getting crushed in that. Sometimes it may be good to take the benefit of the decay when the volatility is less. With loss, make small but consistent. If that's your policy, this may be the right time to trade the options. So always protect your capital if you're carrying forward. Don't take naked calls or naked put selling, buying, and all these things. You always hedge your positions and have risk-defined strategies applied. Right? That way your capital will still be there. You may lose big, but you can always come back because capital is protected. But if you don't do that, the next day your capital will not be there, and you cannot be in the game unless you have more capital that is brought in from somewhere. Because markets are uncertain, wars can break out overnight. You don't know what happens when you're sleeping. So protect your capital, manage your risk is what you can do, and then look at probabilities and possibilities as per what the chart says, where people tend to buy or tend to sell. And that's what support and resistance are all about, right? That's all in our hands. That's just with the market. So that's my view. If this study of the market, this technical analysis has helped you in some way in your market analysis and trade plan for the next day, please don't forget to subscribe. Please subscribe if you're not. and also share to your friends and colleagues so that we get some subscriptions. We have very few, and this will keep us motivated. So hope you'll help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.